Hello, everybody, and welcome to an emergency edition of Hash Rate. This is Mark Jeffrey calling in from a secure location. So, with me today is Fred Krueger. Fred, I have been
Yep.
on planes, trains, and automobiles all day long and sort of following along with, Grayscale Trust, DCG, Genesis, Kerfuffle. So, what's the
Right.
latest? Tell us what's going on and what your kind of analysis is at this point.
Okay, so my analysis is as follows. You have the parent company, DCG, Digital Currency Group. Company started in 2015, which was started and owns several assets, several big assets. One of those is a trading operation called Genesis Trading, which is sort of the sort of market maker for institutional players, and it's not necessarily known by the to the retail users, but it's known and handles all of the institutional accounts. It's one of the largest, if not the largest one.
It's like the
Um,
internet side, so you don't really directly interface to it, but it's
exactly.
not
You
too
don't
far.
interface it with it, but if you have a Gemini account and you signed up for Gemini Earn, your Gemini Earn account is in fact been those funds were moved to Genesis.
Yeah.
So Genesis is the holder of those funds and is providing the interest on those funds for the Gemini Earn product. So they're very big. They're doing hundreds of millions of revenue a year. Lots of employees, etc. And they have announced that they stopped withdrawals. So anybody who sort of put their money in Gemini Earn, in particular, is now kind of on pause as to whether they're in fact going to get their money back. So there's all these creditors that have are surfacing around Genesis, and they have pushed the company to at the brink of bankruptcy, right? So,
Yeah.
and to the point where they either declare bankruptcy, and they say, "Listen, we're going to need some more time to pay off all these debts, and we're going to have to go through the Chapter 11 liquidation process," or not, right? So, uh, if they if they do if they aren't paid and some arrangement is not made with them to accept some lower amount, right?
Yeah.
Some so-called haircut, right? And they say,
Pennies on the
"We'll give you
dollar.
50 cents on the dollar or 30 cents on the dollar or whatever it is," and we need some time to pay off this debt, and here's some equity warrants that we're going to give you, and so on. Now, maybe that deal happens, right?
Yeah.
That would be the easiest for everybody if that deal happens. But that deal hasn't happened yet, as far as we know, right? Now, if that doesn't happen, Genesis can go bankrupt. Now, what is the implications for Genesis going bankrupt? Well, normally none, because it's just a subsidiary of DCG. However, we now have this problem: is that they're a subsidiary of DCG, but they actually have loaned some money to DCG. So now is the problem, because now they can say, "Wait a second, we lent you some money about 6 months ago. We're going to need that money back."
Right.
Okay?
From the parent
So
company.
because of that, they are now threatening to actually put DCG in bankruptcy.
So
Okay,
let me
if
just.
that happens.
So here's the situation. Let me just recapitulate. So you have Genesis. Genesis takes money from Gemini Earn, then loans it out to other people, and that's how they make yield. And one of those people they loaned it out to, apparently we find out now, is FTX, right? So that's where sort of the hole comes from. But also Genesis has loaned money to their parent company DCG, while at the same time owing all these other people a ton of money. So basically, if Genesis goes under, then the people that are owed money by Genesis will go like, "Hey, dude, DCG still got some money because it borrowed some from Genesis. We're going to go after DCG to get our Genesis money back." And so now
Correct.
DCG is in danger also. So that's what we're dealing with.
Correct. And so now the question is, how does this impact Grayscale, right? Because Grayscale it's the largest Bitcoin trust under DCG,
Yeah.
It holds 600,000 Bitcoin. Okay. Now,
Yeah.
this is held in sort of a closed-end mutual fund, right? So people have put this money in, but they can't pull it out. They can't pull this thing out. And it's not an ETF where you can kind of get money in, you can take money out, you can readjust. It's not that. They don't.
California.
This is Hotel California. You put money in and it just stays in, right? You don't leave the Hotel California.
Yeah.
So now the question is, do they just sell part of this Grayscale Trust to somebody else? That there certainly is going to be buyers for this thing, this product. There almost certainly is people who are quite keen on getting this product because it's just a pure cash generator, right?
Why is that? So first of all, how much cash is it generating?
Well, they get 2%, right?
Yeah.
Of the 2% of the net asset value is paid in fees.
Annually.
So annually, right? So if they have 600,000 Bitcoin, right? Then you can just see that they're getting 3,000 Bitcoin, 2%, right? Sorry.
Yeah.
They're getting 12,000 Bitcoin a year.
Okay.
12,000 Bitcoin a year in fees.
So that's like 100 million to 400 million, depending on what the market's doing, right?
Exactly. I mean, at Bitcoin at 60,000, that's an enormous amount, right?
Right.
So 12,000 Bitcoin a year is, even today is a lot, right?
So just to define what, it is. So just to define what Grayscale Trust is and why it exists, is that you have a bunch of Wall Street entities that want exposure to Bitcoin, but they are not allowed to buy Bitcoin directly for legal reasons, right? Which you can explain, I guess. But basically, so instead of that, you have a trust which has been formed, which goes and buys a ton of Bitcoin.
Correct.
Then
an example is the ARK fund by Cathie Wood, right?
Yep.
They own a lot of the Grayscale Trust. I think they're the largest owner of it, right?
Yep.
They can't actually just buy Bitcoin and hold Bitcoin in a wallet,
Why not? Why are they prevented from doing that?
Because they're a mutual fund that's regulated, and there's only certain acceptable, instruments that they can buy. They can't just, they can't put it in a mobile wallet or anything, or even in a Trezor. I don't think I think they have to put it in in one of these exchange traded things.
Yeah. Okay.
So anyway, so that gives you an idea of what's going on now. There's some risk, right? Some risk that actually they have to go into the trust, right? Now, Grayscale actually owns itself a significant amount. I mean, DCG owns a significant amount of the trust. I don't know the exact number, but it might be 10%, right, that they own themselves.
Right.
Right. So if they and let's just say that's 20,000 Bitcoin, okay, or 60,000 Bitcoin they might own, right?
Yeah.
Worth in the trust. If that thing comes out of the trust and they liquidate the trust, that's almost $1 billion right there, right?
Right.
So if they liquidated the trust, they could easily pay it just on the value of their Bitcoin that they have in the trust. However, they then lose the value of this annuity of the trust. So I don't think that's very likely because I think anybody, this is a great asset that all these things exist in the trust.
Right.
That's producing this.
They have no motivation to go and do this.
They have no motivation. And if nothing else, if they needed some quick cash infusion, the motivation is to sell a part of the trust. To say, okay, I'll sell you 30% of my carried interest in GBTC as an entity.
So
they have a lot of options.
Okay.
Probably. But
not a lot of time.
They have not a lot of time, and all their options are sort of bad for them, right?
Yeah.
They definitely, I think, it's going to be painful no matter what, right?
Yep.
And I'm sure that what they would like to do is just say, okay, great, here, you guys just hold on a couple years and we're all good, right?
Yeah.
but I'm not sure that their creditors are going to be willing to give them those couple years and these discounts.
Now, didn't Barry Silver say one thing at the beginning of all this, and then as it unwound, it started becoming something else?
Well, that's the problem. He basically said we have no exposure to FTX, none.
Yeah, that was his first.
And then he said we have a $5 million exposure to FTX.
Second statement.
Then it was like we have a $100 million exposure to FTX. Then it's like we need $1 billion by Friday, otherwise we're going to declare bankruptcy.
Full clown makeup at the end, so it's like that cartoon where makeup is applied. So
that's not a great sequence, as far as building trust. He's not building trust.
Yeah.
And he has not tweeted. There's been 0 statements from him over the entire last week. 0.
Yeah, so that's always a really bad sign. So.
Yeah, so I think there's this general fear that what's he not saying? What do we not know, right?
Yeah.
Now, I will say, looking at the markets right now, GBTC is up, rallied 16, 17% over the last 3 days, right? Bitcoin is up, GBTC is up. The market is sort of indicating there's going to be some resolution to this. Right? I think there will be some resolution to this. I think there's, the FUDsters at this point are thinking, we're going to have 600,000 Bitcoin that are going to hit the market tomorrow. I do not think that is happening. Okay.
Well, that's kind of too bad in a way, because I would love to.
It's kind of too bad because, we could have this sort of once in a lifetime opportunity to buy Bitcoin at 3,000, but,
Right.
But I don't think, unfortunately, that's going to happen. And so, I think, we'll see if, post-Thanksgiving, what happens to DCG. But, listen, this is a very, very real business. He's got real assets. He just tweeted today that his business was on track to do $800 million in revenue this year. Okay.
Wow.
That's a lot of revenue for a company that has only ever raised $25 million, right?
That's incredible. Yeah.
Right, so that's the other thing. This company is not owned by Sequoia. This is a company that bootstrapped its way from nowhere to a mega profitable company, right?
Yeah.
And, that's definitely... it's definitely hustled and not everybody loves their moves, some of their moves. For example, they took the side of Ethereum Classic in the,
That's a weird one, really. I didn't know that.
Oh, yeah. So they in fact, they're the main funders of Ethereum Classic.
Wow.
And the biggest holder of Ethereum Classic, right? So remember the DAO hack?
Yes. Oh, yes.
They were very anti-Vitalik during the DAO hack.
Right. So for those who don't know, basically what happened was someone stole a giant amount of money on Ethereum, and Ethereum had a decision to make, which was to hard fork the chain and to delete the theft from the chain, which goes against everything we've been talking about this whole time of decentralization and, permanence and, and basically the decision was made to fork the chain and to, roll back the theft. And that became Ethereum. And then Ethereum Classic was the version of history where people were like, nope, the theft remains. We keep going with things the way they were.
Right. So, for that reason, he's kind of, because he's been a little bit of a, an iconoclast. He's been doing his own thing, backing tokens like Ethereum Classic that people didn't like. He's been fighting with the SEC on this GBTC thing, trying to get into an ETF, which I think would be a great idea, obviously. But so not everybody likes him. And, I sort of understand the creditors because, from their perspective, here's this really rich guy, right, who's telling them, I need money. And they're sort of like, well, wait a second, what about that Maserati and that Lamborghini that's parked in your driveway? Right. And he goes, well, those I can't. No, that's my.
Yeah, except for those, I'm poor.
Except for those, yeah. And so, that's a little bit the vibe that we're getting here, right?
Yeah.
So I'm hoping that this thing can just get solved. I feel like this is, I think, the last of the shoes to drop. I think once we solve this one, I
And by
think,
shoes, you mean from FTX, like second order effects from FTX.
right. I mean, there's sort of the oddball one. People sort of say Binance is going to be next.
There's Binance and Tether. Those are the suspects.
Well, there's a third one.
Okay.
Coinbase.
Really?
So
Why do
there's people are starting to bring Coinbase out in the same thing. In particular, CZ has come up and said, well, Coinbase's reserves, this, that. So he published a tweet and then deleted the tweet, right?
Mm-hmm.
About Coinbase. And so, and there's immediately met with a response by Brian Armstrong saying, well, wait a second, we're a public company. We, unlike you, have to release audited financials and stuff. You could take a look at all our financials.
Right.
We have all this stuff. We're completely transparent about this stuff. But, I've seen a couple reports recently about like Coinbase could be in trouble in 3 years. They have a lot of debt as well. Most Wall Street companies have a lot of debt. This is not unusual, right?
Where did that come from for Coinbase? I know where it came from for Grayscale Trust. Why does Coinbase have a lot of debt?
Because they could, right?
So
basically, they went IPO, and then they raised a bunch of bonds, Interest rates were very low, and they were like, look, we can borrow money at 3.5%. Great, let's borrow money at 3.5%.
Okay.
The same people who would lend to Michael Saylor lent to Coinbase,
Right.
So, so they have a lot of debt, but they also have a lot of cash, right?
Right.
So
the other thing that was really good about this whole situation with Grayscale was like, people initially were really afraid that maybe they didn't have the 600,000 Bitcoin that they said that they had. Maybe that's just bullshit, right?
Right.
They were custodied with Coinbase, and Coinbase came out and said, no, we custody it. We guarantee that it's all there, even though they refuse to provide wallet addresses and proof of reserves.
Right, and that could just be a technical consideration of they don't technically distinguish between, everything's kind of like sliced up and everything, and
Yeah.
it's just not technically like, oh, it's in this wallet,
Yeah, my Trezor does that by itself. It chops up my coins if I have too many
Right.
into multiple addresses. I can't even control it, so
Right.
I can only imagine that's like the scale, right? So it's like that probably. So
It's like that. So, and I would say, what are some of the outcomes of this? Well, they're all possible, right? Outcome one is they reach some deal with the creditors, right? That's the first outcome. They say, you're going to get X cents on the dollar right now, right? And you're going to get some warrants in digital capital groups. So you're going to get a percentage of the company. We're going to give you, right? And the parent company, and you're going to release us from all claims. That's option one. Option two is we're going to sell off part of DCG, right?
Yeah.
Sell off part of Grayscale, and I could see Fidelity as one of the people who might buy it. Fidelity Digital Assets. We know that they're interested in this asset. I saw somebody say, well, didn't they already do that deal? Like, it almost has been done, but it hasn't been announced. So somebody claims that. They may just not be true. Who knows? But look, Coinbase could also do that, right?
Yeah.
Now, does Coinbase want to spend $1 billion? Well, I'm sure they don't want to, but could they? Yeah, they do. They have $3 billion in cash, right?
Yeah.
For them to buy Grayscale, right, and get $150 million of cash in a year, that would be great for them, right?
Yeah.
It would significantly reduce their cash burn, and it would improve their multiples. Everything would be good. So, I think that would be, those two seem pretty possible. J.P. Morgan would be another one. Who the hell knows? But
That's interesting. Yeah.
we've seen they applied for a J.P. Morgan wallet.
I did see that.
So
I got a trademark on it. Yes.
right.
So yeah, a JP.
Look, Goldman might decide to get involved.
Yeah.
So we don't know who could get involved in this. I would say the Fidelity would be the most likely, in my opinion, right?
Yeah.
But there are definitely players who could do that, and private equity is another one, right? So a private equity group could come in and say, yeah, we've got $1 billion handy, and great, we'll take it over,
Right.
at 10 PE, great, fantastic, we'll take the risk, right?
Did you see that? While we're on the topic of Fidelity, did you see that Elizabeth Warren today sent a letter to Fidelity saying, "Hey, this the recent events prove that you should not be offering Bitcoin products, and you should definitely not be offering it in retirement products, and just like demanding that they stop offering Bitcoin stuff," which is just, it's Elizabeth Warren, so I expect kind of crazy at this point, but still,
yeah,
for her, I thought.
Great. Did Sam Bankman-Fried give her any political donations?
Good question.
Yeah.
As far as I know, no, that she's not been on any of the lists.
Which is probably why. Like, had he paid her, you wouldn't be seeing this, right?
Yeah.
I've noticed that Gary Gensler is not doing much. He's keeping his mouth quite
He's being
closed.
quiet,
Very quiet, right?
He went on TV at first, and he went, "Oh, that's a mistake." So I think, what was interesting was there was apparently a party interested in giving Sam Bankman-Fried some billions of dollars, but then Gary Gensler went on the television and said, "I think all these things should be regulated," and that scared off the potential investor. And so if Gary Gensler was hoping to make FTX his sort of centralized choke point for all of crypto, by going on TV, he screwed up his own plan. So, so not very smart, Gary.
No. But, look, I think at the end of the day, this great mystery is going to be unwrapped. We're going to find the key to what's going to happen in the next couple days. I would assume that by the weekend, we know. And by the way, there's another thing that happens is, Genesis does declare bankruptcy. That may happen, right?
Yeah.
And if Genesis declares bankruptcy, that's probably the worst for the industry, right? Because if that happens, then there is contagion. Then these people who put their money into Gemini are not going to get their money back, right?
Right.
And I don't have any money with Gemini, but listen, I'll give you an example. My dad has some Bitcoin with Gemini, right? He didn't put it in Gemini Earn, but he was like, I read through the terms of it, and it wasn't clear at all that there was any third party or anything. It didn't, it wasn't clear.
I read the terms also. You remember back? I know you remember this because there was a time during the whole DeFi craze when I was making all this yield in the Ethereum and EVM world universe on all those coins, but I had a big pile of Bitcoin. I was making zero yield on it.
Yeah.
And part of my brain was like, well, maybe that's dumb. Maybe I should be taking advantage of these other programs. So I looked at Celsius, and I looked at Gemini Earn, and I like the Winklevi. I know them sort of, and I trust them. I think they're moral people, right? So, but nonetheless, I went and looked at the terms of service, even of Gemini Earn, and all these things had more or less the same terms of service. And it said, you give us your Bitcoin. We then loan it out to other people, and we might not ever get it back, and we might lose it all, and that's just tough for you. And also, we don't have any insurance, so if we lose it, it's gone forever, and there's not much we can do about it, or you can do about it. Like, I looked at that, I was like, this is crazy. This is Bitcoin we're talking about. It's not worth risking it for 8% a year or whatever, right? The risk reward was just totally not in balance, so I never did it. Thank God.
Well, yeah, the problem is, there's gonna be lawsuits if this happens, and you can say whatever you want on the fine print. There will be some lawyer who says, my client, the 78-year-old widow, relied you know, these two fine young men from Harvard,
Yeah.
and she put her entire nest egg in this earn program, and and look what happened to her.
Yeah.
So I think that you can say all the fine print is great, but code is what's written is not law here. In the U.S. you can sue a ham sandwich. So
Sure.
I think it's not a good idea to test that thing. And if I were Barry, I think just the reputational damage alone is going to cost him more. I don't think people are going to be very kind. Nobody's going to want to deal with anything he does ever again if
Yeah, it
Genesis
would be
goes
good for him.
bust. So I tend to think that something else is going to happen. I think he'll either sell a part of DCG or just a part or all of Grayscale.
Yeah.
And if he does, that would be extraordinarily good for the industry, right? Like if Fidelity takes over Grayscale, I mean, everybody would be like, "Yay!" Like
Would
that
be great.
that premium, the discount, which is trading currently at 45% discount, would probably evaporate, to something more like parity, because why not? You know what I mean? Like it's like.
Yeah.
There's no more insider deals. It's run by a professional Wall Street company. And there probably is a much higher likelihood of Fidelity getting it through an ETF than Barry. Right? So I think everybody would handicap the time to ETF at, okay, you probably just cut it in two. You know what I mean? If Fidelity bought it.
Right.
So I think that's the solution. I mean, I think it's just a question of egos now. You got a very, very rich guy, who's been extraordinarily successful in crypto.
Mm-hmm.
And, none of the outcomes are good ones for him. So he's probably holding out for the good one, but
he's gonna have to eat some dirt here somehow in some way.
it seems that way, and then we can kind of get back onto, a bull market. I mean, that's the hope anyways, But
yeah. So basically, the big fear that there's going to be a big rush of glut of Bitcoin on the market.
That's extremely unlikely, and I'll tell you why. Because first of all, even if they want to go and unwind that, they need the SEC's permission to do that. Mm-hmm. The SEC may very well say no. They have to file this Reg M thing, and basically claim that this is, extraordinary circumstances, blah, blah, blah. Then they have to figure out how are they going to do that? How do you get the Bitcoin out?
Mm-hmm.
What do you do? I mean, do you link it to your Coinbase account? Like, just technically, it's not going to happen overnight.
It's sort of like Mt. Gox. Like the disgorgement happens, but over a very long period of time.
Yeah, so I think you have the problem of them even being allowed to do it, kind of the SEC thing, and then just the technical. How the hell do you get that Bitcoin out?
Right.
And can you imagine the amount of scams that are going to be around on Twitter? Click here to move your Bitcoin out. Get an extra 20%. Here's the deep fake of Barry saying how great this new scheme is. Hurry up now. Like it's going to be a mess, right? So I think that's a very bad, quick thing, and it's just not likely to happen over the next year, to be honest. I don't think.
So the most likely scenario is that GBDC is all the Bitcoin in the Grayscale Trust is effectively bricked, at least for a year.
I think that's true. It's going to be bricked, and it's possible that the GBTC owner, which is now 100% DCG, becomes at least partly somebody else. That's a possibility, and I don't think that's bad for the market. So overall, I think it's I think if you look out, I think it's probably okay. I think this stuff can happen before or after bankruptcy, right?
Yeah.
If it happens and there is no bankruptcy, that's a preferable thing. If DCG goes bankrupt and then we have all this mess, that's not good, right?
Right.
Then it's just going to be endless Twitter spaces about, bankruptcy proceedings
Yeah.
and this. And it's just going to take years, right?
Yeah, it'll just feel really bad.
Yeah.
So what? So it's sort of non sequitur here, but where does Saylor sit in all this? Where I haven't looked in on his liquidation price and sort of how exposed he is. He's like one of the other boogeymen that people bring up as something that could get us. What do you think about?
So first of all, let's quantify this. Yeah. GBTC has 600,000 Bitcoin.
Yeah.
And just to refresh everybody's memory, there's a total of 19 million Bitcoin that are out there, right?
Yeah.
Of which 1 million are probably lost to Satoshi, right?
Oh, probably more than that, but yeah.
Let's say maybe 2 million, right? You know what I mean? Satoshi and just lost Bitcoin, right?
Yeah.
So let's just say there's something like 16 million Bitcoin kind of that have been issued and that anybody has the keys to, right?
2 million are at Coinbase, according to Brian.
2 million are at Coinbase. Of that 2 million, 600,000 are the GBTC,
Yes.
okay?
Yeah.
Saylor is on the order of 150,000.
Yeah.
So not insignificant, but only a quarter of the GBTC, right?
Yeah.
So much less of a systemic risk, period.
Yeah.
And furthermore, Saylor doesn't have it's not like Aave where, if some price hits that he is liquidated, okay?
Okay. That's how I thought of it. It was like Aave.
No,
So
not at all. He just issued convertible debt on the company level, right? That without any covenants or triggers at all, right? Now, I think there's a very small amount that does have a trigger of like 3,000 Bitcoin.
Okay. So
3,000 has to get to like 3,000 or so.
Yeah.
But overall, he could just pledge a little bit more of the Bitcoin he has towards that. There's no liquidation that happens there. Now, like Coinbase, he took out some debt. So his risk is that Bitcoin stays at 16,000 5 years from now.
Right. So if that happens.
If that happens, then we have a little bit of a problem because now MicroStrategies has, let's call it $2.5 billion in debt, and the company is not worth the enterprise value of the company might be worth $1 billion or $500 million,
Yeah.
So now he has a real problem, right?
Yeah.
So I say Michael Saylor has bet the ranch that Bitcoin is not going to be below 30,000 5 years from now. That's his bet.
That's quite a bit. Yeah. So
That's a significant bet. I mean, I personally wouldn't have done that bet because I feel like, if I were him, I would have just bet my initial 500 million on Bitcoin, And that's it because you can't. There's no scenario where even if it stays here, so what? Now he'd be down $200 million, but so what?
Right.
He'd still be very solvent. But there is now a scenario where MicroStrategy is insolvent and goes bust 5 years from now. That scenario exists.
Yeah.
Do I think it's a complete risk? No. I mean, I think it's it's a bet.
It's a bet.
It's a bet,
and yourself to a degree.
Bet,
Okay.
And I think he'll be probably okay, and there's certainly no near-term risk for that.
Right.
So overall, I think a lot of FUD for nothing, really. The GBTC is not going to liquidate. Saylor's not going to liquidate. There's only 19 million Bitcoin.
Tether's probably fine at this point.
Tether's probably it's unless there's some new law that Elizabeth Warren passes, where she gets the Tether founders in chains,
Well, I mean, theoretically, from what we're hearing, Tether should be the most compliant of all of the stable. Well, I mean, other than USDC.
Look,
Tether,
all I know, Mark, is that evidently, if you lose $10 billion, they invite you to New York Times roundtables, right?
what in the F is that all about? What in the
Yeah.
SDF? I want to know what.
You
How
know,
how is this
so,
dude not arrested? I mean, we could be here for another 40 minutes, but which we don't have.
but yeah, so I don't know. Like it seems like the the ability to kind of like arrest people who clearly have committed fraud, right? Not just crimes, and they're just sort of walking free, giving interviews, headlining New York Times
That is
things.
amazing. So SBF, for those of you who don't know, so the New York Times had him scheduled at a conference that they're putting on, I guess, in New York in like a week,
Right.
and then this whole thing blew up with FTX, and everybody was kind of like, well, I guess he's not going to go to that conference anymore, and he just announced today, no, I am going to that conference and I'm still speaking, and I'll
Right.
be on stage, and this is in a week.
Oh,
And
did he say on stage? I think he's doing it virtually, though, right?
Oh, I don't know. I don't know if he's actually coming. That would be very interesting. I mean, if I were him, I certainly would not, step in the United States at all. I don't want to be Do Kwon getting served at a conference, right?
No.
So,
Oh, there. I remember that was Do Kwon. Remember? Yeah. Yeah.
Do got served at
I'm
Masari's.
sorry.
Yeah, the
Yeah.
Masari thing. So
But anyways, look, I think that's kind of where we stand. But I mean, I'm still on pins and needles, and everything could happen. So, I don't want to
it's
jinx things.
2022. Anything can happen. That's the one. That's been the one lesson.
And look, I mean, the market fell apart about a year ago. This time Thanksgiving is kind of right, if you kind of remember. That's
Oh, I
right
remember
when the
that.
second wave of COVID hit. Remember that?
Yep.
And people were getting sick again with that new variant, and then the market sort of fell apart.
Yep.
So it really started exactly a year ago.
Yep.
And I don't know. So, we're getting to that season of the year. Everything's possible, but I don't know. I think we're looking. I think we're.
To America, perhaps.
Yeah, exactly.
Well, that's probably all the time we have. And on
Yep.
that high note, thank you once again, Fred, for coming
You're
on
welcome.
at such short notice. My name is Mark Jeffrey. This has been Hash Rate, and God bless us, everyone.